Good morning, everybody. Welcome to the morning kappa at 8 on a Wednesday, and I'm here to present the midweek futures traders technical brief. We are on week 1, January 2026. Happy New Year to all. All right, so let's move ahead. So as the usual, we have got the most popular products traded by traders, and as we can see here, the landscape of the market is relatively on the bullish side. We have seen the US indices to be on a very strong momentum despite of some events in the geopolitical arena. And of course, we have also seen the metals, very, very powerful movements. Gold and silver still on uptrend, and copper also on uptrend, but has gone into slight neutral position. For our own markets, KLCI have already now tagged along together with regional performances and is on positive trend together with Hang Seng and also China, which are also positive in setup. The segment which is struggling a bit is the energy sector, which we see crude oil and natural gas more neutral to negative. So we move to this most popular local product here, FCPO, and we can notice that there has been a persistent downtrend. Any rebounds that we have seen throughout the weeks appear to be a selling opportunity, mainly news driven by Indonesian news, which reportedly exported 20.85 million tons of crude and refined palm oil between January and November last year. And this is up 4.32% according to data released by Statistics Bureau. Also, India's palm oil imports have fallen to an 8-month low in December, pressured by softer winter demand and increased purchases of rival oils, such as soybean oil and also the sunflower oil. So these are basically supply and demand driven, and this has impacted definitely the prices of FCPO. Moving ahead, we are on the commitment traders for US indices. As mentioned in the early part, momentum is gaining, and despite of all the geopolitical risks and especially the recent New Year surprise whereby President Donald Trump has announced that US has captured Venezuela President Nicolas Maduro, and looking ahead, investors surely will focus on market data due this week to assess the outlook for Federal Reserve policy and also the December job reports on Friday. So geopolitical risk for sure for this year looks like will be again, one of the major things that we'll be looking at, and there will be no surprises if President Donald Trump will behave in a manner whereby provides uncertainty as well as opportunity in the equity markets. So we look at the micro S&P 500. So this is the March 2026 contract. We can see that the chart is looking good and attempting to break new highs. And for the first market guide, we are looking at the S&P 500, and both the profile and also the short-term setup is positive. Current price 6987, and the reference price we're looking at is 6975. So this is positive, and the potential profit price we're looking at here is at 7040, and giving us a value of USD 325. Potential loss price is below the 6940 level, and this would give us a USD 175 potential loss. The other product that we're going to cover here mainly will be gold, due to the fact that geopolitical tensions are again, in full view for us. And looking at the commitment of traders, much has happened, especially in copper, whereby there has been a massive short covering, whereby 10,000 lots have been short covered. For both gold and silver, little movement. Gold increased by 3,000 and silver increased by 2,000. And for this, we know that there are a lot of hedgers who are hedging prices as the prices are still very much on the higher end of the trend. So looking at this, we have got micro gold, okay, and generally micro gold is at its strongest annual performance since 1979. But in the near term, gold may face pressure from some commodity index balancing that could prompt passive funds to trim positions following last year's record-breaking rally. But I think before that this happened, we are looking at gold achieving another high before this happens, and therefore we have got a guide on gold. We are looking at the February contract here for micro gold. Both existing profile and short-term chart setup is positive. Current price for gold is 4510 and reference price at 4505. And potential profit price we are looking at is 4630, which will give us a USD of 1250 potential profit, and a loss if it goes below the 4420, giving us a value of a loss amounting to 850 US dollar. So I've come to the end of my presentation. I'll pass on to Aiman. Over to you, Aiman.
Great. Thanks, Vincent. Okay, morning all. Back. Okay, so if you look at the S&P 500, well, it got a high to close at 6,944.83 points on Tuesday. I think as the one of the keynote in the US ignited a frenzy in storage stocks. Also, if I'm not mistaken, there's this stocks SanDisk, right? Together with Micron exploded after the Nvidia CEO stated that the memory market is underserved for the next AI wave. So I think sentiment is better, is positive, and was further boosted by the also Goldilocks ISM services PMI reading, which slipped, and this reinforced the rate cut hopes. Though the energy sector acted as a drag to traders, as they are aggressively to profit on Monday on the Venezuela situation, right? So to me, expect consolidation a little bit today, well, at least below this um uh, resistance of 6,950 level. Support remains back at 6,800 level, right? So if you look at the China A50 futures, right? Well, it rose on yesterday, to close at 15,665, right? Also, as the AI frenzy slip over into Asian market, right? Local tech gains from like I think few names like the Foxconn, the Giga device, right? Search after. Also, Nvidia highlighted the shortage in AI memory. So yeah, I think the rally was also further supported by the domestic policy, and this has resulted to the China A50 to breach above this 15,500 level. So um, today I think as the market sentiment is positive, right? For now, in terms of China A50, you can expect a gap up at least. Gap up, a positive movement or a bullish candlestick for today. Catch on the Wall Street record close. However, do watch closely for the resistance at 16,000 level, and support now remains back at 15,500 level. So for the WTI crude oil futures, well, yesterday for Tuesday's session, well, it dropped to close at $57 level, right, on Tuesday, as the I would say the Venezuela risk premium evaporated. So I think the market price has priced in reports that the White House is urging some of the energy company to ramp up the Venezuelan production, shifting focus back to the global supply surplus, right? So yeah, I think towards the end of the market session yesterday, selling pressure was intensified as the trader position for the inventory data. So yeah, I think expect for further bearish movement, well, at least for today, as the market digests the bearish feel-glad from the report. So resistance remains back at $60 level. Second resistance at 62 with stop loss at $62 level, and support at 55 together with $53 level. So looking at our Malaysia market, well, yesterday the KLCI retreated as the profit taking hit the recent weakness. I think specifically in the financial sector, some of it in the utility sector as well, wiping the Monday's gain, right? So sentiment was I think dampened on the raising concern on the plantation output, and keeping investors on the sideline or await at this juncture, despite the resilient performance in the mid-cap tech stocks, right? So for KLCI, I think expect it to test at least the 1680 level for today. Well, if this level to break, well, it might trend higher towards 1007 level. Same goes to FKLI. It trended lower yesterday. Resistance remains back at 1007, followed by 1730 level. So support remains back at 1650 with stop loss at 1630 level. Right. So for our trading stocks for today, we have Inari and Metron. So the stock has break out its formation at 1.80 level on a strong volume. So with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at 1.95, followed by 2.10 level. So support remains back at 1.65, and if you see any attempt of reversal breaching below this support level, so just beware, right? Also next we have KSL. So the stock is experiencing a breakout at 3.25 level. So if the stock remain bullish, we expect price to reach the 3.40 in the coming session, together with high volume. Second resistance is at 3.50, and also support remains at 3.15 for any attempt of reversal. So we have two breakout stocks for today, Inari and also KSL. So yeah, I think if you look at the property sector, it went up yesterday. I think this relates a bit to KSL, right? It went up yesterday to reach a new high. So I think now trending up. This index is trending higher above all its moving average, which we believe it to be beneficial from the 2026 outlook prospect, right? So this could also be beneficial for KSL incoming session. Right. So for the lastly for the FCPO dip on yesterday's session to close at 3990 and bearish survey data weighed on sentiment. Analysts now, I think analysts now expect for the December the stockpile to hit at least higher, right? So demand also signaled that it turned negative as the inventory in the India, right, came to high of at least 60% for now. So I do expect for quite softer purchasing from the India, and I think I expect the price to trend lower at 3,900 level, together with 3,830, and our stop loss remains capped at 4,180. And for now, we still keep our bearish bias, or bearish negative trading bias unchanged. Looking towards this both of these support level, right? So I'll stop here and I pass on to David. Thanks.
Yep, morning. Thanks, Aiman. Hi, everyone. For today, we have a sector outlook note for the banks, where essentially, in our view, the banks are entering 2026, on fundamentally sound footing. For this year, we are actually positive on the net interest income aspect for banks, whereas if you recall in 2025, because of the margin pressure from the overnight policy rate cut, as well as lower policy, as well as benchmark rates around the region, margin was a bit of under pressure. We think that will reverse this year. So on the net interest income front, firstly, we think the non-household loan pipeline looks healthy, and as business confidence on the outlook continues to improve, that should translate to stronger loan demand as well as drawdowns, so positive for loan growth. Not only is the loan growth expected to pick up this year, on the margin side, we are, a bit more optimistic as to the prospects for margin this year. As mentioned last year, there was policy rate cut, lower benchmark rates, and the impact on asset yields was largely felt last year already. For this year, the lag impact from the repricing of deposits is expected to be enjoyed by the banks. That should lead to lower funding costs as well as a recovery in margins. We think, first half of this year, 2026, we'll see that margin recovery effect from the repricing of deposits. And going into the second half of the year, if banks continue to stay disciplined in terms of how they price their deposits, margins could actually be higher than what it was, 12 months ago, just prior to the OPR cut. I think, partly where our optimism stems from is if we look at the 3-month CLIBOR rate, typically in the fourth quarter in recent years, that has gone up by about 8 to 20 bips, and that is an indication of deposit competition. But if you look at the recent fourth quarter 25, the CLIBOR rate only went up by about 6 basis points. So we suggest that, deposit competition was not as intense. Banks were actually staying very disciplined on their deposit gathering, and all this, again, should translate to better margins down the road. The second theme is for this year is on really dividend yields as well as capital management. With Bank Negara's new capital framework on credit risk set to go live from the middle of this year, some of the banks that adopt the standardized approach for credit risk, such as Public Bank, as well as Hong Leong Bank, they are expected to see their CET1 capital ratio get an uplift from the new ruling, and that will actually pave the way for them to pay out some of this excess capital to shareholders. For the internal ratings-based approach banks, the new rules will only kick in 2028, but that hasn't stopped banks such as CIMB from already declaring a 2 billion capital return plan back in November. Even after that, CIMB, we estimate, has about 1.8 billion ringgit in terms of excess capital. And, we think they're going to do more post 2027. I suppose, one of the banks that investors will also be eyeing is M. The capital ratio is above 15%, so they are actually sitting on excess capital. But we also think that the strong run-up in share price last year suggests that quite a fair bit of this has already been priced in by investors. Elsewhere, if we look at asset quality, we think it's going to be quite benign. Yes, there are still maybe pockets or portfolios where there could be concerns, but on the whole, we haven't seen anything systemic. And we do think that with some of the provision buffers that the bank has in place, credit costs should be well under control. But if there's an overall dampener, we think it'll be a moderation in non-interest income growth, where last year, because of falling bond yields, banks actually realized quite substantial trading gains. But with in-house forecasts looking at flat bond yields, you're going to be harder to repeat those kind of gains. And that suggests that your trading gains is going to be much more modest this year. So for the sector, we are looking at net profit to growth to rebound to 5% this year from about 1 to 2% last year. And really, with that and coupled with dividend yields of about 5 to 5.5%, which we think is still very attractive, we are keeping our overweight call on the banks. Our top picks, we have just juggled it slightly, is now Hong Leong, CIMB, and Public. CIMB was our top pick previously, but due to the recent share price performance, we have just rejuggled and rejigged that top pick list. We have a separate note on CIMB out today where we upgraded the target price to 9 ringgit from 8.55. But even then, again, the upside is still a bit more modest as compared to Hong Leong. So overweight on the banking sector, our preference order, Hong Leong, CIMB, as well as Public Bank. And we also have buy calls on Maybank as well as MBSP for their dividend yields. Okay, that's all from me today. Thank you for joining us. Happy trading and see you again at 8 a.m. tomorrow in the RHB Morning Kappa.